Okay, so let's be real for a second. Seeing Penter take a 30% nosedive in just 5 days, I mean, that's enough to make anyone sweat a little, especially if you're, holding some of their stock. And, you sent us this article, Penter, analysis of the drop in investment strategy. So clearly you're looking for some answers, and honestly, who isn't? So today, we're going to unpack what is really going on with Penter. Figure out if this drop is a sign of something bigger, and most importantly, I think, help you make some smart decisions about what to do next.
Yeah, it's definitely been a wild ride. But while a 30% drop is definitely attention grabbing, I actually think
Yeah.
the kind of volatility, it's almost baked into Penter's story at this point.
Right, really. So this isn't totally out of the ordinary for them.
Not really. I've been following and investing in Penter since 2020. Bought in at $10 a share, watched it climb all the way to $120. And yeah, I was there for some pretty steep drops too. Even saw it dip down to $6 once. And I think what's interesting is, for those who held their nerve and panic and sell, they saw some pretty incredible returns over time. I think even with this recent drop, the long-term picture for Penter is still, pretty impressive.
Okay, that's fascinating. But let's be honest. Seeing, seeing those numbers in the red, it makes it hard not to second guess everything. So the question on everyone's mind is, do I sell now, try to buy the dip, or just, ride this wave out? What's the play here?
I think the article really hits the nail on the head with this.
Yeah.
Don't let the short-term price swings completely dictate your investment decisions. Take a deep breath. Look at the company's fundamentals. Those are what ultimately matter.
Yeah, so you're talking about things like revenue, growth, profitability, that sort of thing, right?
Yeah. Exactly. And in Penter's case, the numbers are actually pretty strong. The article points out that they've got 30% annual revenue growth. Their net income has jumped 190% over the past 3 years. And their gross margin is sitting at a healthy 80%. Those aren't exactly the signs of a company in trouble.
No. I mean, you're right, those are really solid numbers. But then how do we explain this massive drop? It almost feels like these two things don't add up.
Yeah, I think that's where understanding Penter's position in the market
Mhm.
becomes really crucial.
Yeah.
They're basically operating as a near monopoly in their sector, which a lot of analysts believe
Yeah.
sets them up to potentially become a trillion-dollar company. Now, whether or not that actually happens, well, that's a whole other discussion. But I think it does help explain why, even with this dip, there's still a lot of optimism about Penter's future.
Okay, I'm starting to get the bigger picture here. So we've got a company with strong fundamentals, a dominant market position, and the potential for massive growth. But the question is, how do we as individual investors capitalize on this? Because I'm guessing just blindly throwing money at it isn't the answer.
You're absolutely right. I think this is where we need to shift our thinking from short-term trading to a long-term investment approach. It's not about, trying to time the market perfectly or make a quick buck. It's about building wealth strategically over time.
Okay, so what's the strategy then? What's the smart move in a situation like this?
Well, the article mentions dollar cost averaging, DCA,
Yeah.
as a really effective way to handle these kinds of situations. Essentially, instead of investing a big lump sum all at once, you spread your purchases out over time. So let's say you want to invest $1,000 in Penter instead of buying it all at once. You might buy $200 worth every month for 5 months. This way, you're not betting everything on a single price point.
Right, so if the price keeps dropping, you're actually buying more shares for your money, bringing your average cost down. And if the price goes up, well, you've already got some skin in the game, and you benefit from that. Makes sense.
Exactly. And, some might argue that DCA isn't aggressive enough,
Yeah.
especially in a fast-moving market. But I think for the average investor, DCA is a really smart way to manage risk and take advantage of market dips like this one. It takes the emotion out of the equation, which can be really hard when you see your portfolio in the red flag.
Oh, you're preaching to the choir here. I think we've all been there. But before we get too deep into strategies, is there anything else about Penter specifically that we should be looking at? I mean, are there any red flags we should be aware of?
You always have to be vigilant, right? I think the key is to closely watch Penter's fundamentals over time. We know they're strong now, but are there any underlying changes happening within their business? Is their market share slipping? Are their profit margins shrinking? These are the kinds of warning signs that might make you rethink your investment.
So it's not just about buying and forgetting about it. We need to be actively monitoring this situation.
Absolutely. You have to stay informed
Hmm.
and be prepared to adapt your strategy if things change.
Yeah, this is already making me feel a lot more informed. Like I'm starting to see the situation with Penter in a whole new light. It's not just about the stock price. It's about,
Right.
understanding the whole story, the good and the bad.
Exactly. I think that's a great way to put it.
Yeah, and I think for me, that's what makes this whole thing so fascinating, because it's like we're peeling back the layers of an onion, right? Getting to the core of what's really going on. But I have to admit, even with all this talk about fundamentals and long-term thinking, there's still that little voice in the back of my head whispering, what if this time is different? What if this drop isn't just a blip, but a sign of something more serious?
Yeah. Yeah, it's going to be cautious, question assumptions. I think that's how you become a better investor. I don't think anyone have a crystal ball. But we can definitely look for some clues. I think one thing that jumped out from the article is the importance of Penter's competitive landscape. They've got this near monopoly now, but are there any new players emerging? Any disruptive technologies that could shake things up?
Right, because even the biggest giants can fall if they don't adapt. I mean, remember Blockbuster.
Exactly. And the article also highlights the role of management. Are they making smart decisions? Are they investing in research and development? Are they communicating effectively with investors? These are all crucial factors that can affect a company's long-term trajectory.
So it's not just about the numbers, it's about having confidence in the people at the helm. But honestly, even if everything looks good on paper, there's always that element of risk, right? I mean, no investment is foolproof.
That's absolutely true. There's always some level of uncertainty. And that's why diversification is so important. You don't want to put all your eggs in one basket, no matter how promising it looks. The article briefly mentions some other companies in the same sector that might be worth considering as part of a balanced portfolio.
Okay, so spread the risk. Don't get too attached to any single stock. That makes sense. But this whole conversation has really got me thinking about the psychology of investing. It's so easy to get caught up in the hype, the fear, the greed. How do we stay level-headed when the market feels like a roller coaster?
Yeah, it's a constant challenge. The article touches on this idea of emotional discipline, which I think is incredibly important. Having a clear strategy, like the DCA approach we talked about, can really help. It takes some of the emotion out of the equation.
Yeah.
And allows you to make more rational decisions.
That's the part I like, taking the emotion out of it. But I have to admit, even with the strategy in place, it can be hard to resist that urge to tinker, to try to, outsmart the market.
Right. And I think that's where patience comes in. The market rewards those who can think long-term, who can ride out the dips and stay focused on the bigger picture. That reminds me of that Warren Buffett quote the article mentioned. The market is a machine for transferring money from the impatient to the patient.
Oh, that's such a great quote. It really highlights the importance of having a long-term mindset. Okay, so let's say I'm convinced. I'm ready to ride this Penter wave, embrace the DCA strategy, and cultivate my inner Warren Buffett. What are some practical things I can do to monitor my investment, to make sure I'm not just blindly holding on, hoping for the best?
Excellent question. First and foremost, I would set up some alerts or notifications that will flag any significant changes in Penter's fundamentals. You can track things like their revenue growth, profit margins, debt levels, even their market share. That way you'll be in the loop if anything starts to look shaky.
Okay, that's a great tip. It's like setting up a safety net. What else?
Well, it's also important to stay informed about industry trends and any potential disruptions that could impact Penter's business. Subscribe to some industry newsletters. Follow analysts who cover this sector. Maybe even dive into company filings and earnings reports if you really want to get into the weeds.
You make it sound so easy, but I know it can be daunting, especially for someone who isn't, a financial expert. Where do we even begin to learn all this stuff?
It definitely takes effort, but there are so many resources available now. There are great websites, podcasts, even online courses that can help you build your financial literacy. Start with the basics. Learn the key concepts, and don't be afraid to ask questions.
It's funny how we started this conversation talking about a single stock, Penter, and now it's brought into this whole discussion about investment philosophy, mindset, and building long-term wealth. I feel like we've given our listeners a lot to think about, a lot to chew on.
It really is a journey, isn't it? And honestly, sometimes I think that's the most exciting part. There's always something new to learn, new strategies to explore, and new opportunities to discover. And who knows, maybe this Penter dip will turn out to be one of those opportunities. A chance to buy into a potentially great company at a discount.
Fingers crossed, right? But you're right. Even if things don't play out exactly as we hope with Penter, the lessons we've unpacked today, the importance of research, the power of a long-term mindset, the need for discipline, these are principles that'll help us navigate any market, any investment.
Absolutely. It's like building a solid foundation that you can always rely on, no matter what storms come your way.
I love that analogy. So to wrap things up, if you're listening to this and feeling a little less stressed about Penter, and maybe even a bit more excited about your investment journey, I think we've done our job.
I'd say so. Remember, investing isn't just about picking stocks. It's about cultivating patience, discipline, and a commitment to continuous learning. And if there's one thing I want you to take away from this deep dive, it's this. Don't let fear be the driving force behind your decisions. Do your research, trust your gut, and invest with a long-term vision.
Beautifully said. And remember, as we learned today, knowledge really is power. The more you understand about the companies you're investing in, the markets you're operating in, and the strategies you're employing, the more confident and empowered you'll become as an investor.
That's the truth. And at the end of the day, your success as an investor is ultimately in your hands.
Well said. That's it for this deep dive into all things Penter. Thanks for joining us, and we'll catch you on the next one.